Okay? Okay, recording has now started. We are now currently recording the discussion. Okay tayo ha? Game. So as I've told you, net earned premium, this is the net revenues generated by the insurance company, calculated by deducting reinsurer's expenses from the gross earned premium. So 41 minus 3, this is 38. Now, the amount of income from the investments of the insurance company, take note, when they collect premiums, they put it in investments, loans, and receivables, and they are earning. Investment income is also an income generated by the insurance company, aside from the premium. So they are collecting premium. The amount of premium that they are collecting, they are also investing. Add the two, that's the total revenue. Total revenue is net earned premium plus investment income. Total revenue. Now, there are two types of expenses as well. Those expenses that will need to be paid assuming the bad thing happens. In the case of a life insurance, in case death happens. In the case of a fire insurance, in case the fire happens. Okay? Benefits and claims expenses. While underwriting expenses are those related to the selling of the insurance, no? The normal, no? The regular expenses as a result of operating the insurance company. So, what are the expenses being paid, being incurred? The expenses being incurred includes benefits and claims expense. These are the benefits distributed to the insured in the case the bad thing happened. Underwriting expenses, on the other hand, these are the day-to-day expenses of the insurance company. Okay? With no claims, no? Yung normal lang. Now, deduct the two, you will have the earnings before taxes minus income taxes. You now have the insurance company's profit or loss, net income or earnings. Okay? Now, can anyone tell me what the expense ratio is? Please turn on your mic. Expense ratio. This is calculated as underwriting expenses divided by the net earned premium. Yes? Anong sagot mo? Okay. Nawala yung mic. Naka-on yun ah. May nag-chat? Okay. Mr. Matiani. 2, 1/2. Okay. Underwriting expense over net earned premium. So what's the expense ratio? The underwriting expense is, anyone? 1/2? Okay. May narinig akong mga mic. Oh. Hello?
Oh, sir, 36.8%.
Okay, 36.8% daw. Let's check. Underwriting expense, this is 14. Net earned premium is 38. These are in billions, no? 14 billion divided by 38 billion. So very good. You are correct. That's 36.84% expense ratio. Expense ratio is simply the ratio of those underwriting expenses. Every time an insurance is sold, okay, the underwriter will have to check everything, the terms, the conditions, those items related to that, whether a medical checkup is needed, what other requirements are needed. underwriting has expenses. Okay? Underwriting expenses divided by the net earned premium. Usually, yung medical checkup, sagot yun ng insurance company. The medical checkup will be shouldered by the insurance company. Okay? So that would be underwriting expense divided by the net earned premium. That's 14 billion divided by 38 billion. You have 36.84%. So from the sales of premiums, from the sales of policies, premiums are earned net of insurance expenses, reinsurance expenses. You have 38 billion. Out of the 38 billion, 14 billion is being spent on underwriting related. 36.84%. So you can compare maybe the underwriting expenses from the other insurance companies. What percentage do they constitute of the net earned premium? Or it would be better to look at the trend. Every year of operations, every year the insurance company is operating, what percentage goes to the reinsurance expense? No. What percentage goes to the underwriting expense? What percentage of the net earned premium goes to the underwriting expense? In this case, it's 36.84%. To evaluate whether this is good or bad, look at the trend. Last year, kumusta? Last year, kumusta? No? Last year, how was it? Last year, how was it? Okay? And you may also compare with other insurance companies. Next. What about the loss ratio? What's the loss ratio? Anyone can answer, please?
Sir, 102.63%.
Okay. So let's check. Loss ratio is the claims expense divided by the net earned premium. So that's 39 billion here divided by the 38 billion. So very good. That's 102.63%. 102.63%. 102.63%. So, in the case of a life insurance, 39 billion was being paid, okay, was being paid to those people's, the family of those people who died. No? The family of those people who died. Yun yung claims expenses. Benefits and claims expenses, meaning the damage happened. In the case of fire insurance, compensation for the fire. Life insurance, compensation for the loss of life. Okay? So, how would we evaluate this? This is a tough year. Ang daming namatay ata, no? If this is a life insurance company, napakaraming namatay, no? Mas mataas yung binayaran natin kesa doon sa nakuha natin na premium, net of reinsurer's expense. So, as a ratio, as a percentage of the net earned premium, there is a lot of claims. There is a lot of claims, no? Napakalaki ng claims. So, claims expense over net earned premium. So, 39 over 38, that's 102.63%. Now, unlike the underwriting expenses, where you can predict, let's budget the underwriting expense only at this amount. Yung benefits and claims, you cannot budget that more or as precisely as the underwriting expense. You can decide how much to pay for the medical clinic, how much to pay for your underwriters. However, the amount of claims to be distributed to those people who lost their lives, who lost their car, who lost their buildings due to fire, or whatever is being insured, you cannot reliably estimate it. So, to determine whether it is profitable to operate this insurance company, you cannot simply look at 1 year. Looking at the figure for 1 year, baka naman itong taon na to malas lang tayo. Kaya napakalaki ng claims expenses natin. Maybe this is a very bad year. If this is a bad year, edi kung bad year man ito, better make it up for next year. Baka naman next year wala masyadong mamamatay. Example, no? May bagyo tayo ngayon, no? Mas malaki ang damage sa vehicle insurance kapag city yung affected. So kung naalala nyo yung Ondoy, no? Naalala nyo yung Ondoy, yung Yolanda, pwede na rin, no? Yung ito, sa Cagayan talaga affected. Sa Metro, medyo kalat lang, no? In the recent storm, okay, maybe a lot of vehicles get damaged, but not as much as Ondoy. If you can remember, talagang lumulutang yung mga kotse nun, no? Okay. So, if they are covered by insurance, some insurance companies, some terms would honor the acts of God, no? Acts of God. Now, they would have to distribute a lot of funds to those who are insured because of what happened. So 39 billion over 38 billion, this is 102.63%. You cannot evaluate loss ratio on the basis of only 1 year, not even 2 years. It should be at least maybe 5 years, no? To determine whether the insurance company would be profitable. The combined operating ratio is simply the total of the expense and the loss ratio. You add up the loss ratio, that's 102.63%, and the expense ratio, 36.84%. You have the combined operating ratio. Okay, anyone? Does anyone have an answer? Ano kaya yan?
Sir?
Yes?
Is it 139.47%?
Okay, very good. You just have to add them up. Okay? You just have to add them up. So that would be 14 billion plus 39 billion, the underwriting expense and the claim expenses. Then just divide it by the net earned premium. Very good. That's 139.47%. Again, that's 139.47%. We call this the combined operating ratio. You just add the two. So it's very important that you distinguish expense from loss. Expenses are recurring regularly with more predictability because they are related to running the insurance company. Losses are those that are not as predictable because they pertain to the damages that the insured has suffered that the insurance company must compensate. So expense ratio, loss ratio. Combine the two, you have the combined operating ratio. 139.47%. Mukhang hindi sulit ang insurance company. No? Mukhang hindi sulit yung operations ng insurance company. But I've told you already that the claims expenses, you cannot only look at 1 year. So the combined operating ratio, just like the loss ratio, you have to look for at least 5 years to determine whether it is worth it. And furthermore, aside from selling insurance, the insurance company also has an investment income. The insurance company also has an investment income. So dito, 22 billion yung kinikita niya from investments. Meron bang interest, dividends, kung ano man yan, no? Interest, dividends, kung ano man yan. That would be 22 billion in total. So what about the insurance margin? At the end of the day, did the company earn? At the end of the day, did the company earn? Anyone? Anyone? Let's go to insurance margin. So can anyone tell me what the insurance margin is and whether the company did earn? Anyone?
18.42, sir.
Okay. So let's look at the insurance margin, ha? Titingnan natin. Nako, nawala ako. Wait lang. Ayan na. So insurance profit is 7 billion. Mas maganda gamitin yung before tax divided by 38 billion. You have 18.42%. Now, maybe you would want to use earnings after tax. Depende, no? Depende sa requirement. Pero ginamit ko dito 7 billion. So the earnings before taxes is 7 billion. Divided by 38 billion, that's 18.42%. We call this the insurance margin. At the end of the day, kumita ba siya? At the end of the day? Are there profits? Well, of course, no? Meron namang kita. It's positive. You have to compare the insurance margin with those of other insurance companies. So, kumusta yung ibang company? How are the other companies? Okay? Compare the insurance margin of our insurance company with that of other insurance companies. Then there you go. You may evaluate the relative profitability of our insurance company. We call this the insurance margin. Think of this as the sales margin. Diba? Yung bawat benta natin, magkano napupunta sa kita. For example, if we're selling a total revenue of 1 billion pesos, when we say the profit margin is 10%, 100 million, no? 100 million yung ating kita. That's revenue minus expenses. So the insurance margin is very much related to the profit margin or the sales margin in a retail company. Okay? Now, do you have any questions on the calculation? Marami palang nagre-reply dito. Yan, 14 and 39.47%. Okay. So, are there any questions related to the calculation of the margin as well as the interpretation? Calculation, interpretation, what have you? Okay, wala akong naririnig. So, wala. Okay. So, let's now proceed to insurance regulation. Let us now proceed to insurance regulation. Insurance regulation, we have the insurance commission. The government agency responsible for the monitoring and regulation of insurance is the insurance commission. Who regulates the insurance companies? The insurance commission, IC. Commission here is the institution, ha. Hindi ibig sabihin nun, nangongomission sila, ha. Hindi ito yung commission na natatanggap ng agent. The insurance commission is the regulatory body of insurance companies in the Philippines. They are reporting under the Department of Finance. The officers of the insurance commission report to the Department of Finance. So ultimately, the Secretary of Finance has oversight on insurance activities. What companies are under the watch of Insurance Commission? What companies are under the watch of Insurance Commission? You have the insurance and reinsurance companies. Malala nyo kanina, yung insurance company, pwede nilang ipa-insure yung ini-insure nila. They will do it to the reinsurance companies. The insurance commission has oversight on insurance and reinsurance companies, mutual benefit associations. Nakikita nyo yung mga savings and loan association, yung bang mga paluwagan, no? Yung mga paluwagan, yung mga pulis, yung mga sundalo, no? Mga AFP, mga PNP, they have their savings and loan association. Then you can also say this for teachers and any group of trade workers. Savings and loan associations. Paluwagan lang yan, no? Basically, paluwagan. They contribute and then they are going to borrow if they need money. Mutual benefit associations. Health maintenance organizations, in short, HMO. Health maintenance organizations. So these are your health cards. MaxiCare, IntelliCare, yung mga may care, no? MaxiCare, IntelliCare, ano pa? Ayun. They're usually labeled with the care, health maintenance organizations. So they are also under the insurance commission, no? So insurance companies, PhilAm Life, Sun Life, Pru Life. In the case of appliances, ano nga ba yung sa appliance? Okay. I'll remember that later. No? Malayan, no? Malayan Insurance. Alam niyo yan. For appliances. And then mutual benefit associations, health maintenance organization, yung mga health card. Then recently, ratings organization. Ratings organization are those that provide ratings to potential borrowers. They provide the ratings. Sa Philippines, hindi ko lang alam kung meron tayong ganun. Pre-need companies recently are also under the watch of the Insurance Commission. Now, for some of you here, siguro yung parents nyo na-scam ng CAP, no? Alam niyo yung CAP? I hope you know what CAP is, no? The educational plan. Do you remember? Batang 90s pa naman kayo, no? Okay. So, ako sa early 90s ako. So, kayo ba 90s pa rin? Pinanganak? So, for the kids who were born in the 90s, their parents get scammed by CAP. Why? The cost of education went up exponentially. And CAP failed to forecast it. Akala ng CAP, hindi magmamahal masyado yung mga tuition. So they collected premiums that are well below the necessary amount. They end up going to bankruptcy. So CAP is an example of a pre-need companies. So RIP, no? Sa mga pondo na binayaran ng magulang natin. So it wasn't recovered, at least not 100%. We call this pre-need companies. Because of what happened to CAP, pre-need companies became under the watch of Insurance Commission. Nung time ng CAP, IC was, this is out of the scope of IC. But after what happened to CAP, IC is also monitoring pre-need companies. No? Yung bang meron kang kailangan sa future, babayaran mo na ngayon, sila na bahala. No? So you pay the premiums now so that your children, when they need money for college, they will be the one to provide it. Unfortunately, CAP went bankrupt. Local corporations or a foreign branch are allowed to operate as insurance companies. Who can operate an insurance company? A locally established corporation, a locally registered corporation. Okay? I believe Coco Life is Filipino. Foreign branches, Pru Life UK. Pru Life UK is a foreign branch. Sun Life is the Sun Life of Canada. Sun Life of Canada is also a foreign branch. Hanapin nyo yung FS nila, no? Yung FS ng Sun Life, naka-dollars, no? Naka-dollars yan. Minimum capital requirements in 2019, it's 900 million pesos. Come 2022, magiging 1.3 billion pesos. It will become 1.3 billion pesos in 2022. So when you want to establish an insurance company, you need at least 900 million pesos. Hindi naman pwede yung pera mo, 100,000 lang. Mag-i-insure ka, paano kung namatay yung tao? Saan ka kukuha ng pondo? So there's a minimum capital requirement. As of this point, it is 900 billion pesos. It will become 900 million pala. 900 million pesos. It will become 1.3 billion in 2022. However, last January 6, hindi na ako updated dito. I forgot to update myself on this. Last January 6, the Insurance Commission plans to cap the 900 million pesos for local insurance companies. Okay, according to Secretary Dominguez, this is from the Department of Finance. I will no no. According to according to Dennis Funa, who is going to report to Secretary Dominguez, Department of Finance, I will recommend to Secretary Dominguez that we stop at 900 million pesos. I will suggest that we forego the 2022 increase to 1.3 billion pesos as stated in the amended insurance code. So maybe they're going to scrap the 2022 requirement of having it at 1.3 billion pesos. Ang gagawin na lang nila, 900 million na lang. But further developments should be monitored kung ano ba talaga mangyayari dyan. So I've told you in 2019, as of 2019, it's 900 million pesos. Come 2022, magiging 1.3 billion pesos. Now, if this is a new business, the paid up capital should be at least 1 billion pesos. So kung bago to ha, if this is a new insurance company, 1 billion pesos. Yung minimum na 900 million, minimum of 900 million, this is for existing insurance companies. But for the new business, it should be at 1 billion. So mas mahigpit sa bago. Micro-insurance, those who are serving the marginalized sectors of society, at least 500 million pesos. So almost half, no? Around half from 900 billion. 9 million lang, no? 900 million. This is 1.3 billion, 1 billion. So if this is 900 million, for micro-insurance, at least 500 million. This is already good. There is a risk-based capital requirement, very much similar in the way we manage risk for banks. We call this the Rbc Ratio. Now, this is the second version, Rbc2 Ratio. The Rbc2 Ratio is the total average capital, which includes both Tier 1 and Tier 2. Lahat ng tier, ha? All tiers are included here. Rbc2 Ratio. Total average capital over Rbc requirement. As I've told you, the Rbc requirement is a very complex calculation that involves a lot of square roots. No, it involves a lot of square roots. I'm not going to test you on the calculation of the Rbc requirement anymore. Now, the minimums are Rbc2 ratio should be at least 100%. Okay? The Rbc2 ratio should be at least 100%. If you divide the average capital by the Rbc requirement, it should be at least 100%. Wherein, the Tier 2 capital should be less than or equal to half, meaning not more than half of the Tier 1 capital. The Tier 2 capital should be not more than half of the Tier 1 capital. These are the measures. Okay tayo ha? Tier 2 capital should be at most 50% of the Tier 1 capital. The Tier 2 capital would be at most half of the Tier 1 capital. 50% of the Tier 1 capital. At most, ha, this is the maximum. Rbc2 ratio, minimum of 100%. Tier 2 capital, a maximum of 50% of the Tier 1 capital. Policyholder protection, there is a required security fund. So, iba yung tawag nito sa ibang bansa. A security fund is needed for the protection of the policyholders. So, an added layer of protection in case mabankrupt yung insurance company is a security fund. Okay? So, basically, that's the regulation of insurance companies. Do you have any questions? Do you have any questions? Anyone? Do you have any questions?
My husband.
Okay, everything clear? Wala na tayong pag-uusapan pa? Okay. So I'm going to stop the recording now. I'm going to stop the recording. Okay, ito na yung i-post ko. Oh, maybe